I remember a time when I thought investing was only for people with real money. Suits, stock charts, Wall Street jargon. It felt like a club I wasn't invited to. But then I stumbled on a simple calculation that flipped my thinking. If you invested just $5 a day, the price of one coffee, into an index fund earning a 10% annual return, in 20 years, you'd have over $100,000. Not from luck, not from gambling on crypto hype, but from boring, consistent investing. Why does this matter? Because it exposes a hidden psychological truth. Humans are wired to overestimate what they can do in a week and underestimate what they can build in a decade. That's why most people chase quick profits and miss long-term freedom. Here's the trap we fall into. We wait for the perfect time. Maybe after that raise, maybe when debts are cleared, maybe when the market looks safer. But wealth doesn't grow in maybes. The market rewards those who act while others hesitate. In fact, a 2023 Fidelity study showed that investors who started early, even with smaller contributions, ended up with 80% higher retirement balances than those who waited for the ideal moment. The irony? The perfect time never comes. What matters is not timing the market, but time in the market. But here's where most beginners stumble. They try to pick the next big stock, jump into trends, and then panic when the market dips. That's not investing. That's reacting. True investing starts with structure. Automate your habit. Set up an auto transfer of even $25 a week into a diversified ETF or mutual fund. This method, known as dollar cost averaging, quietly shields you from market volatility by buying more when prices fall and less when they rise. You're not trying to beat the market, you're learning to flow with it. Still, there's one thing rarely discussed: emotion. The reason small investors quit isn't loss, it's boredom. The market doesn't reward excitement, it rewards patience. Psychologists call it the reward substitution principle. When gratification is delayed, your brain needs smaller wins to stay engaged. So, track your progress. Watch dividends reinvest. Celebrate your growth, even if it's just an extra $3 this month. That dopamine keeps you going when others give up. And let's not forget the power of compounding. It's not math, it's magic disguised as patience. Albert Einstein called it the eighth wonder of the world. But here's what he didn't tell you. It only works for those who respect time. But before we end, let me plant a final curiosity. What if, instead of thinking, I can't afford to invest, you thought, I can't afford not to? Because every dollar you delay investing is a worker you never hired for your future. Your money can either work for you or against you. It's your choice. So start now. Skip one unnecessary expense this week and redirect that into your first investment. An ETF, a fractional stock, or even a dividend fund. Watch it grow, slowly, quietly, steadily. You'll realize wealth doesn't start with millions. It starts with momentum. Because the question isn't, how much do I have? But how long am I willing to let it grow?